Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. Okay, so we still got a bull market. It's still running. Today I want to cover off the legalization trade of marijuana and look at it from an investor perspective, not into any of the politics around it. Just the fact that the incoming presidential party has decided or has announced that they would be legalizing it. And so there's a lot of change around that. So I want to show how we're going to work with that from an investor perspective, and then I'm going to cover off some of the breadth indicators briefly just to show you what I'm looking at to see if the market's in danger of getting weaker. And then we'll go into the marijuana names. We'll sort the list. Even if you're not interested in marijuana stocks, you might learn something about sorting here that it's a little complex because we have a couple of tricky things going on in this particular area. Okay. I'm going to start on the advanced decline line for the NASDAQ. And what I want to show you here is this stock is, or the index is clearly going higher, and so is this advanced decline line. And I'm looking at the cumulative version of the advanced decline line. And then what does that mean? So down here at the bottom is the daily version of the advanced decline line. So in this case, almost 2,000 stocks were advancing. So it would add this onto this cumulative total from the day before. So here there's no addition to the day before. It just shows us the raw either net advancers or net decliners, and then it adds that on every day. So in the last, basically since November 1st, we've only had 5 down days in the whole thing here. So it's been quite an advance. And what we see with the index is the price has been moving up pretty smoothly as well. So that's the NASDAQ. Now when we go to the New York Stock Exchange, we see the same thing here, the advanced decline line really soaring. And then we see price action drilling up in the top right-hand corner. Very bullish, big breakouts here. The next way to analyze this is to get a cross-section of those two groups, and we take the largest stocks. So we take the top 1,500, and then we do an advanced decline percent for them. And the idea being 70% advanced today, so we would add that to our advanced decline or whatever, and I just picked that 70 out of the air. We just add that on, and we continue to add that on or subtract it depending if we had advanced declines. Now, the difference on this particular group is one of the things that works really well is this 2-week moving average. And why do I say that? Well, here we have a super spike high that gets up really high, and it almost reaches an exhaustion, and price goes up and then just falls away for almost another month after that. And then in April, we had a couple of spikes. Even this one here was pretty high. Market stalled for a bit. Got another one, stalled for 2 weeks, 3 weeks. Ran up really hard, June 8th high, stalled there for a month or 6 weeks, and then finally got going again. And recently in October, we had a brief spike high, rolled down into the election low, and then took off to the upside. But the one thing that shows up on this chart that's not quite obvious, but it's pretty good, is when they stay around this 20 level, just kind of a sustained push. This is pretty nice, and we see this back in here, very smooth in the July-August time frame, where we just kind of ran up against this 20 level, stayed positive most of the time, but didn't have deep pullbacks, and that makes it a little easier, right? And when we go back into 2019, late fall, we actually had this go on for almost 5 months. Basically, since the mid-October, we got up to around this 20% level and ran along here. And again, this is the 11 period moving average. So just trying to keep track of the average through that period. Smooths it out pretty good. Got a little bit negative in here. Market wobbled a little bit, nothing too bad. And then ran very nicely into the end of January, had a dip down, and then rallied back out of the hole. And on that dip down, we got our first lower reading here, and that was kind of significant. But the point I want to make is all through here with these average readings up at a higher level, this was a pretty good place to be on board and relatively smooth, not a lot of pullbacks, which makes it easier to own stocks at the time. So what I can see here is that we're having a relatively smooth uptrend with not a lot of, what's the word, exhaustion trends or whatever. And we also don't have a lot of whippiness where the market's kind of jerking back and forth like it did through the April-May timeframe, run up, back, run up, back, run up, back. It's been a relatively moderate, just gentle advance going through the market. So that works nice. I do want to cover off one other indicator, and that's the McClellan oscillator. And it works a bit like the advanced decline line, but I want to talk about it specifically for how it's calculated. So this basically takes the what you're really looking for here is whether or not it's positive or negative, and how positive or how negative it is. And what you saw off both of the big lows, the 2018 low was you saw this spike really, really high, very, very bullish. In late March, you saw this spike really, really high. The point I want to make is notice when it spends time kind of locked on one side of the zero line. So in this case, almost every day from late March all the way through to even mid-May, 2 months, the advanced decline line was rallying pretty much straight up. And so this was going higher. This up here is the summation index. And what does that mean? We take these daily readings and we add them on. So almost every day, this had at least some level of positive, right? It was +1 all the way to plus 125. That just shoots this indicator straight up. Now, briefly in here, we had one pullback, and so that's this little whip in here, no big deal. But we end up with this summation index basically saying things are really strong. This is up at the 1,000 level. So now maybe some of you have seen the CNN fear and greed indicator, and it's been sitting up in the high 90s or low 90s, 92 or something like that. So on my Twitter feed, I get all of this. Oh, this thing's so high, the market's got to go over, roll down, whatever. We can't make predictions about that. What we can say is a lot of people are enthusiastic about the market. That's what that fear and greed indicator shows. Now, I just showed you the advanced decline lines are moderating relatively smoothly. They're not really over enthusiastic. The market's going up by kind of an average amount every day, quite a smooth advance. So that's pretty bullish. We are up near the top, but what I want to show you on just this raw level of analysis is just because you're high doesn't mean you're about to fall. And if we put a line on here, I like to use 400. I just have to make sure of one thing. Yeah, McClellan oscillator is in the middle here. So I want to put my line on the summation index. So down here, I'm going to go and get this, and I'm going to change it from -300, which is the lime line that you see here. And I had put that on because we were at that level probably during the crisis at some point there. But I'm going to put 400 on here. Now, the reason I want to put 400, and we'll put black or something just to change the color. So the idea being that that's how you change the color setting and put it on that particular indicator. So in this case, I've picked the summation index. I want to put an overlay called a horizontal line, straight line. I want to put it at the level of 400, and I want to make it black. So when I do that, it now plots this level. So the point I want to make is when the market stays above 400, you're pretty bullish. And if we look in this, while we're climbing, it's always bullish. But when we start to chop around, it starts to get a little nervous. So what we see here is we were at a very high level. We started to have a few days of pullbacks, right? So this pulled back relatively sharply. That June 8th high was a pretty big exhaustion move. And then we pulled back, and then the market actually rallied very smoothly for a couple of months in here. And the advanced decline line, well, positive, wasn't hugely positive. It was just kind of somewhat positive, just barely, considering this was how big the thrust was before. Now we get up here, and so what that does to the actual cumulative index is it makes it weaker, but not to the point that the market is really damaged. That's the word I want to look for. So what we want to watch for is when it actually starts breaking down, and I can go get an inspect line here, but just show you that when let's just go, can you see the cursor line there? So what I want to show is all this period in here, actually into here, is we had this big choppy market and we were below 400, and so we really didn't make a lot of progress. And so the way I like to use this indicator is when it's below 400, we have to be a little more cautious, and when it's above 400, it's a little more helpful. Now, when it's rising, it's always helpful. What you're trying to figure out here is, are we going to start turning around? Now, this isn't the indicator that I would have used to pick my turnaround spot, but I have other indicators that were helping me with that. I will say that when the McClellan oscillator is above zero, like it is right now, and just kind of holding up here, that's a good bullish constant thing that works really well. The market can run very smoothly. And back here in 2017, we had a really smooth market run pretty much the whole year. It was quite smooth, and we didn't have huge positives, but we had nice positive, for the majority of the time for that whole year. We spent the vast majority of the time above the zero level. And so that kind of helps us see that the market trending based on this McClellan oscillator. Now, again, we had some dips in here, and this started to fall below zero meaningfully, and the market pulled down through that period. And then we finally got back above zero and took back off again. We're using a very small chart here to kind of show these wiggles. But the point I want to make is, yes, we had a couple of 5% corrections or 10% corrections during the year, but in general, most of the market time was spent in a positive price action area. And even all through 2018, we had a huge pullback, and then the market spent a couple of months trying to sort it out with real back and forth action. In the latter part of the year, we actually had a nice run up here. This was weakening but not falling below my 400, and then when it fell below the 400, that's when we actually lost that 20% market share or 20% price. So that big pullback showed up nicely on this chart, and we also had it on here, helping us just recognize that the market's actually damaged here for a bit and going lower. When it gets back above that 400 level, we want to be aware of the trend change and not to get too hung up. Yes, you're going to have pullbacks or whatever in here. I have other indicators to kind of help with that pullback, but the point I want to convey is that when you're up at the really positive area here for almost a year, do you really want to fight the market main trend? And again, you might sell some positions when you're up high, raise some cash so you can buy low, all that kind of good stuff. But you might have core positions you just don't want to exit. When you want to start to worry is when you start to drop below this 400 level and then try to analyze the whole bigger picture. Right now we're in a very solid place. We might wobble, but again, the market seems stronger here for me based on the advanced decline line, the rest of my data, whatever. Really a nice backdrop for investing. So I have a couple of strong beliefs, and I'm starting to hear more and more of them. Mine come from the charts, but more of them have thought about the broad economy a little different than I have. And I think it was BlackRock and Blackstone, both of them have come out saying, we're seeing a pretty positive trend, and we think 2021 is going to be pretty good. Paul Tudor Jones said 2021 is going to be pretty good. I'm reading some independent blog pieces where people think 2021 is going to be pretty good. And the main reason for that is all of this pent up demand. We think that 100 million people will be vaccinated by either the end of March or the end of April. And once you get 100 million people vaccinated and the world starts to return to a strong position, we can actually have a growing economy, have consumer discretionary return, get back together with our friends, go back to sporting events, fly into hotels and stay for weekends to attend these events and that kind of thing. Lots of changes coming at us. But even though we're at the darkest days in terms of the numbers of COVID vaccinations, or number of COVID infections, if we really want to think about when did things start to get better, it's probably now as we start to vaccinate. And our first vaccination was in the UK today, as on the Tuesday. As we work out of this hole, and more people get vaccinated worldwide, that will definitely slow the virus and help the economy. So I want to bet on that. I don't really want to focus on, how bad is it going to get over the next 2 or 3 weeks. I want to kind of be ready for the big part of the move. And I'm telling you that the market is trying to show us that. So that's the big message I want to show you out of the advanced decline data. It's smooth trending. It's not exhaustion ramping. It is literally just kind of working its way higher. And again, does it need a 5-day pullback? Whatever. I don't want to trade that small, but I want to try and catch the big trends. And right now, I think we're in one. And so my charts are pretty positive. My outlook here is is equally as positive. Okay, hopefully that helps just kind of explain the breadth and how we read it and why we're looking for that sort of information. And I have some other charts that I shared with my subscribers on the weekend. Really smooth trend to higher, and we haven't started to drop in any way yet. And we had about 6 weeks notice on the February drop. So nothing is telling me, whatever, we can have wiggles, but nothing's telling me we're going to have a big collapse. And I heard some guy on TV today, or actually read the article, and it was like, this is going to be terrible when it all unwinds. Okay, I get that. The problem is we got to be in the market while it's not unwinding so that we can make some money. And invest in these really strong companies. So that's the goal for us, is to try and be in when the market is working. Right now it's working. Don't let the fear and greed chart, and don't let the naysayers pull you out of the market when you've got a smooth backdrop going on. And when the backdrop changes, that's what subscribers are paying us to write about, is we talk about the situation for the market and when to be defensive. And people who are reading my work were in cash for the move down. So hopefully that gives you an idea of how we use breadth and how it can help. Okay, so what I got here is I got a whole bunch of stocks with some numbers in them from a prior sort. I'm going to get rid of that, and I'm just going to remove all the numbers from those sorts, and I do that by going to the edit list. Now, I can't sort it by price or whatever over here because there's no price on this page. So I go to the summary view, and with summary, I can add some columns or whatever, and I can work with the data. Let's say that we wanted to focus on the highest volume stocks. Well, they might be penny stocks, so that doesn't always work. So we can also do it by close, but the problem with doing it by close is we get the highest price stocks first, not necessarily the best one. Like GW Pharmaceuticals is a $126 stock, but it's only got a 20% scooter ranking, or StockCharts technical ranking. Not very good. So I'm going to combine those, and what I want to show you is the scooter ranking kind of puts the best stocks first, but the problem is most of those are the Canadian listings, and then the second group where we will use price, and we can stay kind of above $1.46 here, will give us a lot of the US ticker symbols, and also stocks with some better price action. So we kind of have to break it into two components. Just because this group, when Canada legalized, that's what made the stocks run. And now the opportunity for the US to legalize is there, but what we don't know if the same stocks are actually going to rally, because they might have been set up in the U.S., not in Canada, and the majority of their revenue is going to come out of there. So with this sort order, what we do, so again, it's just by clicking on these headers at the top, right? So if you click on whatever, the volume first, then you pick on close, and then you pick on scooter ranking. If we have a situation where two stocks had the same price, as an example, and that might be found in the penny area. So down in here, two stocks both had 46 cents. It would put the largest volume stock first, just to help. Anyway, not a big deal. We're not going to have time to cover off the penny stocks today. Not really where I want to focus. We want to focus on the stocks that are probably already being selected as the winners coming out of this election decision, and the fact that the incoming party has decided that they wanted to legalize or at least decriminalize marijuana at a federal level. So with that, we want to sort in this order. And so we go to the bottom of the page and we hit this number in a sorted order button. And when we hit it, it's going to put numbers in front of everything to help us control our sort order. Now we go to the chart, and it's going to put the strongest stock first because we've focused on the scooter ranking. If we wanted to run a scan, we could have ranked it by PPO or ranked it by RSI and all that kind of stuff. We could have done anything without getting into the scanning engine. We just did it very quickly. So here is the RSI, and you can see on this particular stock, Afria, it's up around 70, very strong. It's had a nice move off the lows, and it's just kind of mellowed for the last three weeks here. No big deal. And then we see the PPO nice and high, so the stock looks pretty good. Here's Canopy Growth. The Canadian ticker is WEED.TO, and the US ticker is CGC, Canopy Growth Corp. The stock's still doing well, looks okay. It's been flat for the last couple of weeks here, hasn't really done anything, so we want to keep watching. Here's Elcana, and the stock's been rallying, pretty much from the March lows. It's been a nice run from $1 to $6. From $1 to $6, and it's still okay. There's nothing wrong with the chart. It's working good. We had the volume spikes come in on the back of the election and the election results kind of being confirmed. So the stocks are responding, but again, even on the second rally, we didn't get much price movement. So now I think what we want to focus on is watching which stocks are starting to break out differently. And here's Innovative Real Industrial Properties. They've been focused on warehouse space for the marijuana sector. Medical Marijuana ETF, this is HMMJ. And what we see on this one is it basically got a surge on the election and hasn't done much since. So we just want to kind of keep considering that. Kronos, it's been at this level for almost a year. Nothing really here. Scott's, this is a very nice uptrending stock, and we see that the RSI is just under 70. Again, we could have ranked on RSI, but it wasn't one of the column values that we could kind of quickly pick. And it's got a scooter ranking of 67%, so it's better than 2/3 of the stock out there. But again, just a nice gentle trend for years. You can kind of own that and like it. Hydropothecary, stock's been sideways for about a year. Nothing really going on here. GW Pharmaceuticals, bit of a rodeo ride, and it looks like it's breaking down again this week. So probably not one that we're looking for. And hopefully you're starting to see how the stock quality is declining as we go down this page. These charts are still pretty ugly here. When we get into the second act here, the stocks, you're going to see, they're pretty average. And then all of a sudden, we're going to start to see big improvements when we change our ticker symbols. So we're getting into Aurora Cannabis here. It still had the big surge off the election, but nothing since, still under the 40-week moving average or at it. Organogram Holdings, low-cost manufacturer, declining, hasn't got above its 40-week moving average yet here, so still probably too early. Valens, they have some technology within the marijuana space, still not really breaking out of anything here, kind of a general downtrend. Here's Cardio therapeutics still breaking down, nothing really here. And this is the ETF for the inverse. So when marijuana stocks were falling, this chart would be going up. And now, obviously, as some of the marijuana names have improved, this chart's falling. Okay, I'm going to just scroll down through these lousy ones, but here's all of a sudden we're starting to see a stock do very, very well. And this stock continues to push up. It's delivering in the top right-hand corner, and it's True Leaf Cannabis Corporation. It's up around $40, and obviously a nice upward sloping trend. And here's Canopy Growth in the US, and again, it's trending higher. This is behaving well. One of the quality picks for the names going forward. Green Thumb Industries sitting up here. It's working its way higher. Hasn't done anything for 6 weeks really since the election, so not really anxious to get on that train. I like this Curaleaf. It keeps grinding higher. This is a pretty nice looking chart. Here's TerraSend, obviously working well, partner with Canopy Growth Corporation, and it's climbing nicely. Cresco Labs also improving. Podex, this is a cannabis ETF. It's been pushing higher, but again, just kind of stalled this week. Hasn't done anything. Aurora Cannabis, we're already getting down under the $10 stocks here. It's sitting right at its 40-week moving average. We kind of want them to get above that in order to be really interesting. But look at the volume change on the back of this election. So somebody stocked up on this stock, and what we want to watch for is as it starts to break out, we want to be ready. So that's something to at least be aware of. And then looking at Afria, again, pushing up nicely on the U.S. listing. PPO momentum still high. Lots of volume coming in on the stock. Looks pretty solid, even if it needs to consolidate here for a little bit and then just draw a line across. And if it starts to make its upward trend, then we want to get in. Tilray, the CEO had once said it wanted to be a $100 billion company. It's a $1 billion company, so it's got some work to do. We're sitting here under $10, and it's just grinding sideways, but it is above its 40-week moving average, the downtrending one in green. Want to keep watching it. If it can obviously improve, that would be better. MJ Planet 13, this one's really starting to accelerate since the election, and that's probably more what we're looking for. Maybe their store outlets, I don't have any idea. I'm looking at the chart, and the price action is starting to lead us up and away, so that's probably a good thing here. Arrow Growth International, just gone flat here. I don't know if they've done a merger or something, or if it's just no interest in the stock. Harv.ca, gentle climb here. It's okay, but nothing really great. FSD Pharma, terrible. C21 Investments, and this one's actually starting to climb quite nicely here. So out of all of these stocks that we've looked at above $1, very few of them are actually climbing. So you want to kind of pick your spots to get into this market. And then Organigram is the last one we're going to look at. But I think the big perspective I want to show you is that just by looking through the charts, we can quickly tell which ones the investors are starting to lean towards for the U.S. election results, and just try to avoid the noise around the rest of them. And I think we'll probably make more money doing that than trying to go through all of the financials and figure it out ourselves. So if you can, head over to my website. There's more blogs and videos there, some stock of the week and some instructional videos. And if you find anything you like, go ahead and work with it. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recordings on StockCharts TV YouTube page. By the way, my website is gregschnell.com. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.